Hello, today is Saturday, September 9th, 2023. I am, as always, Jason Shapiro with crowdedmarketreport.com. So this week I heard a couple conversations that kind of triggered me. So I wanted to kind of rant about that and see where this goes. And the one that really triggered me was this guy was like, well, you know, if 10-year rates go to 4.5% or 5%, then the stock market's definitely going down. No. Okay? There's no definite word in this business, right? I started trading, I'm 56 now. I started trading at 21. I was living in Asia. I traded Asian markets for about 6 or 7 years. Then I moved back to the U.S. and I've traded U.S. markets, and I've traded for the last 20 years a suite of 37 markets across commodities, fixed income, stocks, currencies. And if there's one thing that I've learned in all those years, it's that the market doesn't have to do anything, okay? In fact, it usually does the opposite of what you think it has to do. So to believe that a market has to do this because of that, it's just so misplaced. And just because somebody says it and they said it with authority, and just because maybe it makes sense logically, doesn't mean it has to happen. I guarantee you it doesn't mean it has to happen. And we can go through and I can point you to, oh, well, here's where interest rates went up and the stock market still went up. There's plenty of examples of that, right? But we don't need to do that. You can go and look at any market, any time frame. Go back and don't look at the market. Look at the news in that market that came out in the press and all that for a year. And then say, okay, given that I know all that, what do I think that market would have done? And you'll see that so many times it did not do what you think it would have done. I can go through a million examples of this, right? But suffice it to say, the market doesn't have to do anything. If you think, and I'm not saying that if interest rates go up, the stock market right now won't go down, okay? But I'm saying it doesn't have to, right? A million other things can go on, and trust me, when that goes on, then people will use that as the excuse of why, oh, well, this is why the stock market didn't go down despite interest rates going up. Right? So stay away from that thought process. It will kill you. If you think, let's say, right now, interest rates are going to go up, and you want to bet on that, okay, then bet on that. You know what I mean? Bet that the bonds are going to go down. Mathematically, there's something that has to happen. If interest rates go up, bonds have to go down, because that's just math. All right. Bet on that. Don't be like, well, interest rates are going to go up, so therefore the stock market has to go down, so I'm going to get short stocks. It's a second derivative. First of all, you have to get the first part right, which is hard enough, right? Interest rates are going to go up. Hard enough to forecast that. But now you're going to go to the second derivative. Oh, and therefore stock market's going to go down. So now you have to get that right too. It's just that much more room for error, you know? Stock market doesn't have to go up or down based on anything. Like I say, look at the history of markets. It'll prove that to you. Pick any market. And look, the reason for that is because it's a discounting mechanism, right? So, like, I'm looking currently at this thing that a lot of people are talking about, this seasonality chart, which has worked very well this year. Suddenly, everyone realizes that it's worked very well this year. Nobody was talking about in January, hey, let's look at this seasonality chart and trade that. Now that it's worked over the course of the year, now everybody wants to trade it. And it's saying basically September should be a down month. You know, it's looking at like historically what the stock market has done on average over each month of the year, which is silly to begin with, but whatever. It's worked this year. So it's saying it basically should be down in September and, you know, kind of down a little bit in October. And then we're going to rally into year end. All right. So it's a discounting mechanism. So if everybody believes that it's going to rally into year end, they're not going to wait, you know, for it to dip. You know, I mean, it's just going to rally, right, into September, through October. And then that is discounting in this year-end rally idea. And that will be fully discounted in, should that happen, should we get this rally in September and October. And then the year-end rally won't happen because it's already discounted in. And it's discounted in by positioning, as I've always talked about. That, to me, is the major discounting mechanism, the positioning. Right? You know, if everybody in the world guaranteed that the stock market was going up 20% by year end, then they would buy it now. And that 20% would go in already, right? So that's how this works. And that's why the market doesn't have to do anything. It's a function of what's discounted in already. Stock market has to go down if interest rates go up. Well, I'm not saying everybody does believe this at this point, but if everybody believes that interest rates are going up, then what new information is there that's going to make a market move? There has to be new information that wasn't expected for there to be a move in the market, right? I'm not saying a daily move. That's all random anyway. For a large sustained move, there has to be a difference between what is discounted in and what actually happens, right? Which is why kind of being contrarian gives you good risk reward. That's a whole nother conversation that we've had before. But again, my main message today is don't believe any market has to do anything based on something happening, because it doesn't. You have to get that out of your mind. And if you believe it, you're going to get stuck in a position and you're not going to be able to get out because you're going to be so dug into it because you believe this has to happen, and you're going to take a very large loss, right? So don't believe that. Trade the market as it is. Don't trade it for what it has to do. All right? I hope that makes sense. Always happy to hear questions and comments. And looking forward to seeing you on crowdedmarketreport.com. Thanks, and have a profitable week.